Hey gang, it's Simon here with your Tao Daily video for Wednesday the 8th of May 2024. Everyone I speak to, pretty much every smart person I read or speak to at the moment is bearish, all right? So I'm going to lay out the case for why I'm inclined to give the bulls the benefit of the doubt here. So the things I'm looking at, we've got the first green momentum bar came in on Monday. It's the first green momentum bar we've had since the 3rd of April. All right, so that's bullish. We've now got 2 green momentum bars in a row. So that's number one. Number two, price is above all of the key moving averages. Now, the moving averages are a bit of a jumble, so we don't have clear trend, but price has broken back above all of them. Number three, price is above the anchored VWAP level from the start of the year, which means the market, on average, is making money in SPY this year. So that lends a more bullish tone, a more bullish mindset to the market. If we come across and look at the VIX, the VIX here is trading at 14. All right, so it's back in the lower end of its range from Q1. All right, you can see how during Q1, looking at VIX futures here rather than the spot VIX, it basically traded between 14 and 16. Which means the market's out of its acute phase. Now, the fact that we're at the lower end of this range, 14 or call it 13 and a half, has been a pretty good level of support, argues for potentially a short-term pullback. But if you look at how the VIX has behaved, or how the S&P has behaved every time the VIX has kind of spiked from 14 to 16, I mean, these pullbacks have been extremely small, okay, extremely manageable and good buying opportunities. So, looking at the VIX, maybe we're due for a little spike up. Maybe SPY is due for a little pullback. But if we're in a 14 to 16 VIX futures regime again, it sort of signifies a market that will take these pullbacks in its stride. And if we look at bond yields, so TNX is the 10-year Treasury note index. Bond yields are continuing to track lower. Okay, all other things being equal, that should be a benefit for equities rather than a headwind. If we look at the dollar and TNX, I mean, the two charts look almost identical this year. Seeing a little divergence here. Okay, the dollar here is looking like it may have bottomed and is going to resume its uptrend. That would generally be a headwind for stocks and risky assets. I say it's a headwind rather than a death sentence because obviously the dollar has been trending up all year. And what's the S&P done? Well, it's trended up all year as well, up until April. What did the dollar do in April? Well, it basically went sideways. So what's going to happen? Well, if I knew that, I promise I would tell you. But let's just draw some Fibonacci levels on this chart again. So if we just take some fibs from the all-time high to this recent swing low, we've run right into that 78.6% level. This is definitely a level where we could pause, we could even pull back. But if the S&P pulls back and finds support at, say, this 50% level, where these moving averages sort of come into play, with all the evidence I'm seeing, I would take that as a buy the dip opportunity. That's what I got for you today, folks. I hope it helps, and I'll catch you tomorrow.